Ladies and gentlemen, as we are still in January, please let me start by wishing you a happy new year. May 2018 be prosperous to all your ventures, either private or professional. It is with great pleasure that I welcome you today on behalf of Bank Luxembourg here in our auditorium for the 42nd edition of the Midi la Microfinance organized by ADA. A particular thank you goes to all the regular attendants of these events that are as such very loyal participants for these meetings. Bank Luxembourg has supported ADA, its initiatives and projects for many years now. Furthermore, we service in a capacity as depository and custodian bank numerous investment funds that are invested either in micro or in impact finance. As of today, microfinance and impact funds represent roughly 1/4 of all the investment funds that we accompany that are invested in so-called non-liquid asset classes. Over the last year alone, we have onboarded 4 new funds in this segment, and an additional 2 have already been confirmed for launch in 2018. And as I said, we're only or still in January, so we see a lot of potential there also for the rest of the year. We also observe growth in terms of assets under management of all these structures, confirming that institutional as well as private investors remain loyal to the asset class as such. Client protection, sustainability, as well as interest rates are topics that are very important for investors in many, if not to say all, asset classes. They gain even more importance when it comes to some extent, lesser developed countries or to markets, respectively to microfinance projects. As such, I look forward to a very interesting discussion allowing us all to get more insights on these subjects by today's experts' views as well as their experience. Veronica, the floor is yours. Thank you very much.
Good afternoon. Thank you very much for your kind words, your presence here. It's my pleasure to be here this day to talk about client protection, MFI sustainability, and interest rate, and even more to be joined by these 2 wonderful panelists, Rosa Pasos, who is the is member of the executive board of the CONAMI, which is the regulators of non-banks microfinance institutions in Nicaragua, and Suleiman Yobo, who is a senior project officer at ADA and is work basically with MFIs in all the African region. So today we will discuss what is the relationship between these three topics, right? Client protection, microfinance sustainability, and interest rates. Why there is a relationship? Well, the thing is that microcredit has contributed worldwide to provide access to financial services to underserved segments of the population, and has been traditionally focused on productive activities, on financing productive activities. But since the average microcredit is very low, this translated in high operative costs and therefore high interest rates. So what is behind high interest rate compared to interest rate of other loan portfolios, mortgage or corporate loans? So what is behind this interest rate? There are endogenous factors such as the cost of funding. Many MFIs don't even take deposits, so this is a huge cost. Operative costs such as labor, because it's a labor-intensive activity because of the small size of the loans, the cost of the branches, of the channels to get to the clients that are usually in rural areas or that belong to the informal sector, credit risk, cost, portfolio regulation because of the high provisions applied to microcredit portfolio, operating risk, the margin, of course, portfolio loss, and there are also exogenous factors behind interest rates, such as the macroeconomic context of the country, a weak infrastructure, maybe a judicial power that is not effective, or lack of credit registries, a weakness business environment, and so on. Customers, microfinance customers usually belong to the informal sector or poor segments of the population and have never been in touch with formal financial institutions. They lack collaterals to be able to guarantee the repayment of a loan and lack the information to facilitate a credit risk assessment, and also lack financial literacy, so can easily become over-indebted or be subject to abusive practices by an unscrupulous financial player. So while there is a clear argument that justifies higher interest rate compared to other loan portfolios, these are necessary to ensure financial sustainability. But these higher interest rates are, while they are reasonable because we need to ensure financial sustainability of the MFI, there is also a risk of abusive practice by financial players that can be the only source of access to loans for these segments of the population. So we are here to understand how, in the context where Rosa and Suleiman work, financial authorities and the market itself have dealt with this kind of a challenge. So in first place, I would like both of them, and maybe Rosa, you can start to explain us what is the MFI context in Nicaragua and what is the current status of interest rate for microfinance institutions.
Okay, thank you. So sure. Nicaragua, who is in Central America, I don't know if everybody knows where that is. We have a high market of microfinance, very dynamic market of microfinance. I belong to the board of directors of our regulatory institution. We have two different regulatory institutions, one for the banks, one for the microfinance institutions. In the board of microfinance regulatory institution, we have two members of the private sector. I'm one of them. I represent the microfinance institutions in the board. Up to now, we are regulating 38 institutions, which add up around 6,000 clients, 600,000 clients, and $350 million approximately. Those numbers are December 16. We still don't have the new numbers, but the 2/3 of those institutions are growing in around 16% growth. So most of them are growing. Our regulatory system does not include savings. We still don't permit savings for the microfinance institutions. Cooperatives are not regulated by us yet. We're still on the track of doing it and discussing about that. Our target clientele of all these institutions are more or less average credit of 800 to 1,000. So that's more or less how you can see how we target poor. But we have a very diverse type of institutions. We have NGOs, we have for-profit, and some of them are below $2 million portfolio, and some of them are above $30 million. So we have small, medium, and large institutions being regulated. Banks are not, we're not on the same regulation as banks because banks are not really downscaling that much yet in Nicaragua. So the microfinance dynamic activities do that they have had this opportunity to really reach a segment that banks and financial standard and conventional system has not yet gone there.
What about interest rate? What is the landscape of the market? How have it evolved since Konami was created? Because Konami was created 5 years ago, right?
Yes, we have 5 years. Yes, yes. Interest rates range on the same median that the micro rating agency. This rating agency, you know, I don't know if all of you know, Microrate. They do a lot of ratings on microfinance around the world. And their mediana in terms of interest rate are right now go around 31%. Well, our institutions, half of them are below 50% interest rate. Half of them are between 50 and 70. But according to the micro rate agency, the minimum is 17 and the maximum is 70. So we are more or less in that range of the world, let's say. It's not as low as banks and it's not the highest. But as Veronica said, this is due to many different reasons, but still there's a challenge that we think we could still be more efficient because most of the component of that interest rate usually is due to administrative costs, more than the cost of funds. Cost of funds is always more expensive because we don't have savings, yes, but the cost of fund maybe is up to 15, and then the administrative costs really are usually 40, 45, 30, depends.
You mean as a percentage of the total component of the interest rate?
Yes, well, yes.
Okay.
There are other components, but
yeah.
Yes.
Thank you.
Yes.
What about Africa, Suleiman? What can you tell us about the market, the microfinance market in Africa, and how do you see interest rate there?
Okay, thank you, Veronica. First of all, let's note that when talking about microfinance in the industry in Africa, it is different from a country to another one. But I will focus on West Africa, French-speaking countries. 8 states, 8 countries are under the same law, which is the Central Bank of West Africa. And by the time being, we have 700 institutions that's operating in microfinance. Among the 700, most of them are cooperatives, and they are allowed to take deposits. In the last decade, we saw the green fields, and banks who start downscaling. I mean, the banks start moving in the area where microfinance is operating. Regarding the interest rates, we note that in West Africa, the interest rates are low compared to other countries. And since from 2000 to 2015, we saw a trend. The interest rate decreased from 36%, which means 3% per month, to almost 15%, which means that the market is very competitive in West Africa. But if it is low in this area, it is because the inflation rate is very low, and the cost of funds also is very low. So the interest rate is declining, and the market is very competitive.
Okay. Oh, wow. Well, we have very different contexts here. So I would like to hear what have been done in each of your contexts, to improve the the current situation of interest rates, how it evolves first in the past years, and what has been done by financial authorities, or what has happened in the market to, like in the case of if West Africa, to decrease interest rates. And I don't know what about Nicaragua, what has happened in the last few years, like has interest rate decreased, and why has that happened?
Yes, well, as I said, there's a great dynamic of microfinance, so we have a lot of competition. There's high competitiveness, that helps a lot. And also our regulation, the policy of transparency of information has evolved in this matter, in the sense that you have to disclose the rate of interest to all clients. So our policies tell microfinance institutions that you have to show clients in their contracts and in other means of publicizing in the microfinance institutions the rate of interest that you're charging. So you have to disaggregate it. You have to say, this is the rate of interest, this is the cost of commission, this is the cost for insurance, and this is the cost for disbursement, or whatever cost the rate has. So this has helped a lot in the sense that institutions show their rate of interest, and the client at the same time can decide, and we promote the right of the client to decide where is it more convenient to go and what institution will satisfy his need better in terms of the cost for the client. So that has helped a lot.
Thank you. So the main strategy in Nicaragua has been to work in a strong framework of consumer protection. Do you have like complaint mechanisms available, I imagine, for the customers? Maybe you want to feature any example of how this mechanism has been enforced and help customers to, I don't know, to
Yes.
really...
Yes, thank you. Yes, our law includes all the client protection principles and all the consumer protection principles. First, our country has a national of consumer protection. That is a big umbrella that we have for all types of consumers. And there is a chapter, special chapter for financial services consumer. And then our law of regulation states a special chapter for this, and more specific. And for example, we forbid flat rate. We forbid, it has to be a rate you have to pay on the outstanding balance and not on the original balance. That stopped because a lot of microfinance institutions used to do that. We also forbid the penalties for prepayment of loans. So that also helped a lot in protecting the rights of the client. We also have a claim system. The client can claim at the institution if something is not, it has a problem or whatever, and we also oblige the institutions to have a customer relation officer that has to be in front of the institution to take care of and explain everything on their contract. And we even oblige that the contract has certain type of font, size of font and type of font, Arial 12, for example. And the clauses of the contract has to be very clear, very precise, and we take care that they don't have, that institutions don't give false expectations either. We take care that they have the right to get the truth in every arrangement, in every contract, everything.
Okay, thank you, Rosa. So, while in Nicaragua, the main strategy has been to enforce consumer protection and to set a very detailed framework for to promote the decrease of interest rates, I understand the situation is different in Africa. So, can you tell us about that, please?
Yes, in West Africa, in 2005, the regulator set up a cap, a ceiling for the interest rates. It was at 27% effective rate. And 10 years later, they decreased this ceiling from 27 to 24. This is to promote the inclusion finance and to promote the best practice. So West Africa is the only one right now that kept the interest rate in terms of effective, not the nominal one. That was based on the trends of the inflation, the trend on the cost of the fund, and the way they are building capacity in the sector. Okay, now in terms of protection, client protection, I say that most of them are cooperative. When operating like a cooperative, the training, the transparency, in terms of transparency on prices, over-indebtedness, and client complaint are the baseline in the cooperative. In addition to that, in West Africa, there are 8 countries that is, those are members of African Organization of Business Law. And the business law is the one, it's a kind of disclosure that helps people protecting clients.
So there is a regional mandate to comply with disclosure that functions equally for all the 8 countries.
Yes, the 8 countries are under this same regulation and disclosure.
Since you mentioned that there are interest rate caps, I was wondering how this affects financial sustainability of MFI. How this cap has translated into the financial sustainability of institutions and in the competition in the market.
Okay, before setting up the ceiling, the central bank make a survey to know who will be less or who will not be profitable with this law. And among the 700 MFIs, they saw that most of them can support this ceiling. But the small MFIs are not complying with this because even inside the regulation, they don't have the human resources enough to make the inspection and ensure that everybody is complying with the law. So the credit union, by the time being, are complying with the law and can be profitable, but the small one are not. It is the reason why they are preparing a disclosure to say that, okay, you cannot be a stand-alone credit union or cooperative. You have to merge to have a network so that you can support some customers.
So somehow there will be a trend towards consolidation of the sector since these small MFIs will disappear because they cannot survive through this interest rate cap, right?
Yes, even for that, it's not only the West Africa, even in the Central Africa, starting this year, there is a law that complies every MFIs in terms of capital equity, in terms of status to comply with the law in view to improve the inclusion finance.
How this will affect customers, like the customers of these small MFIs?
Now, by the 10 years back, or less the 20 years back, to serve a remote area people, you have to have a point of selling, service points. But now, by using the new technology, like digital finance and so, you can reach them without having a fixed investment for that. So let's say that the new technology are a new way to serve unserved people in the remote area.
Let's hope that happens. Okay, so that leads us to the last question. So how do you see that new technologies and new financial players that are entering into the market by using technologies such as, I don't know, P2P platforms or mobile companies entering in partnership with credit providers and facilitated loans will impact in current microfinance market, and what effects can that have in interest rates? Maybe Rosa, you want to?
Yes, yes. Well, for us, this has been more of a challenge than something that we have experienced massively. I would say that we still don't have that much of a practice like mobile, the banking in cellulars. We only, there are some institutions that are innovating on, for example, they have on their phones already the credit bureau connected in an application, so that when they go and look for a client, usually repetitive clients, not new clients, they would approve immediately at their home through the internet with the phone by consulting the credit bureau. So some of them are already having that type of service, but we still don't have like a fintech. But we have, for example, institutions that are very, very developed in systems, in hardware and systems and in technology in their systems to control, to monitor data, but not necessarily products, you know, digital products.
Thank you. So basically, like institutions are trying to update, catch up with technology by improving their own back office operations, and also some processes with customers directly, but there are not new players yet that are technologically based or
not with the products, but the technology. There's like, there's new upcoming institutions that are like in the last year or last 2 years that are really big and have a lot of capital and good technology, especially the ones that are into more commercial, fast delivered credit, you know, the ones that are that lend for electrodomestic appliances, and they, you know, they have volumes of clients, and now they're giving credit also, apart from the commercial credit of the appliance. And they are very fast and very dynamic in technology, but not necessarily having the products and the services, for example, through mobile phones.
Okay, so these.
But it's you know, it's like it's so competitive, and this new, I think that we're gonna be confronting that very soon.
Okay, so it's kind of
The
a new
market
thing
is
in the
pushing.
market. And these institutions are under the regulation of CONAMI too,
Yes.
despite they are
Yes.
consumer loans,
Yes, they are.
retail
They are.
providers, right?
Yes, they
Okay.
are regulated too.
Thank you.
Okay.
What about, what do you think, what is happening in West Africa regarding inclusion of new technology providers, or I don't know if there are P2P lending platforms, or how the offering of loans is being digitized in your area?
Okay. In West Africa, since 2015, there is a law on fintechs operations. And it is not allowed to mobile network operators to intervene in the finance. It can only be on the mobile, not in the finance.
So they cannot give loans, but
No.
they only like make transfers and provide e-wallets, let's say. Yeah.
Just for that, not for the transaction. And there is also a disclosure, a regional disclosure that encourage every country to have a platform to allow MFIs going on this platform and boost their in terms of mobile banking or digital finance. So there are two means that can allow people, MFIs moving in the microfinance. And every country has also, let's say, national microfinance funds that pay for capacity building and sometimes the line of credit. So it is all that package that can allow us moving further and better.
So there is a regional platform that is supporting innovations in technology within microfinance institutions?
Yes.
Okay.
Yes.
And I understand also mobile operators can get into the business of providing credit by doing partnerships with financial institutions?
They can, there is two ways. Either they request for a license to be a bank to do it, or they partner the team with MFI to do it, which is a kind of downscaling like banks.
How do you see that affecting interest rates?
In short run, it will not affect the interest rates, but in the medium or long term, it will affect it in terms of, it will help decreasing the interest rates. Because when you are investing to have all those equipments, you cannot decrease your costs. Given that most of them are there, okay, we have to go slow by step to avoid increasing our interest rates by the time being. So only the partnership can help them keeping the interest rates where it is and then decrease in the long term.
Mm-hmm. Okay. So this has been a super interesting discussions. I thank you very much, both of you, for all your insights on what is happening in your markets. I invite you all to make some questions, maybe to the panelists, about this interesting topic. So there is two persons in the side with microphones. So please go ahead.
Thanks for the great presentation. I have one question. Because the cost of funding is one of the major challenges that MFIs are facing, especially in Africa continent. So I would like to know how to deal with this question of cost of funding, because in some way it's not really recommended to have like to take the source of funding through like a microfinance fund, because it will impact the market and it's not efficient, I think, in some cases. So it's my question. Thank you.
Thank you. I think we can take like 2-3 questions, and then the panelists can reply.
Mine is not really a question. Mine is maybe just some observations that we are talking about interest rates, to say if interest rates are, if you reduce the interest rates, you must also take into account the sustainability of an MFI or a microfinance institution. Are the microfinance institutions paying? Are they not paying for the inefficiencies of microfinance institutions? Because the greatest portion of that interest is a component of operational costs for the microfinance institutions. So my issue is, I think there is need for policymakers to look at the cost structures of microfinance institutions. Most of the time, they are paying for inefficiencies of MFIs. I could give you examples. For example, microfinance institutions in Zimbabwe. As a central bank, we came up with, I don't know whether to call it a cap, but we required them to actually reduce their interest rates, because some of them were charging interest rates of between 17 and 30% per month. And you are charging the very same poor person that you think you want to assist. when we looked at the interest rates, their arguments were that they had operational costs. When we looked at the operational costs, the majority of those institutions are in urban areas. And they focus on salary-based loans, so there is no risk assessment of any sort. They just give loans, they go to the paymaster, and they get their funds back. So there's really no operational cost there, but the client will have to pay for it. My view is that I think as policymakers, we need to look at the cost structures, just find out what is contained in those cost structures, disaggregate the effective interest rates. What does it comprise of? Is it just interest rates? Does it comprise operational costs? And what nature of operational costs are they? I'm also looking at issues of the policymakers not just coming to a conclusion that the poor person does not mind paying high interest rates. I don't think so. The poor person minds because they don't have money. Yes, they want access to finance. But what is it that policymakers are doing to make sure that access to finance does not become costly to the very same poor people we are trying to assist?
Thank you very much. I think we first address the question about the funding, and then, Rosa, do you want to take up on this comment?
Okay.
After Suleiman. Yeah, please.
Okay, the cost of funds and how MFIs, to respond to your question. If I take the example in Benin, the Fonds National de Microfinance is the fund with 3 components. One component is credit line at 3%. I know that the interest rates, the inflation rates in Benin is 2.5. The interest rate on the public fund is at 3%. But the issue is that when you lend from this public fund, there is a cap. You lend at 3%, and you have to release at 8, almost 10%, which is an issue. Otherwise, all those funds are the 3 components, and it's up to you to select what you want. Coming back to the structure of the cost, I think it is not the regulator to do it. It is a management task. When the CGAP made a survey in 2010, we found that it came up that the cost of expensive operation cost is almost represents 65% of the interest rates. So I agree with you that people are paying for the inefficiency. So we have to assist them, reducing their inefficiency, and to be more efficient, then we can reduce the interest rates. When you are saying that, okay, the regulators say, the poor don't mind interest rates, we have to add, they don't mind interest rates if they don't have access to the fund. It is when they have access to the fund, they start minding about the interest rate. So there's two situations. When they don't have access to the fund, they don't mind the interest, but when they have access to the fund, then they start counting how much I'm going to pay for that.
Thank you. Well, let's remember we are talking about institutions that have high operating costs because of the nature of the loan, right? So, yeah, just let's be careful on stating that every institution is inefficient in managing their costs. I don't know, what do you think about this issue in Nicaragua?
Yes. In terms of the cost of funds, the main source of funds of these microfinance institutions is, of course, credit from international banks or social-oriented banks that give funds. That's mainly the source. But also, there has been a little bit of change in that in terms of some microfinance institutions are looking up for investors new investors. And our law also permits the issue of bonds, for example. So we have one microfinance institution that already was permitted to issue bonds in the market, not for particular, you know that there is the bonds for, I don't remember the name, that is not for everybody, but for what we call investor, confident investor. Yes, sophisticated investor. So that has helped a little bit because we still, I said, don't have permission of savings. But it's really a challenge, and microfinance institutions also have made arrangements with banks. So banks already that know this institution and have been working for years with the institution have a better rate of interest from the bank. So I would say that's more or less. But I don't think that the cost of funds is they are that high in Nicaragua, as I've seen in other parts of the world. And in terms of what she was observing, I agree, of course, with what you said. Yes, it's something that worries all of us, the inefficiency in the institutions. But I believe also that with this high competition and with this regulation that we have in terms of the transparency of information, in terms of the right of the client of knowing who is offering what and at what price, we've had a lot of success because clients show loyalty to certain institutions. The institutions are growing. So I would say that that they can decide, and the rate of interest, vary, as I said at the beginning. So they can access institutions that don't have very high rate of interest, and that is helping us a lot. Also, with the regulation, as you were saying, with the going inside, let's say, the financial statements and look up what are those operational costs, what do they mean? And that's also important for us because there is transparency in our regulation, and it's obliged to have an internal audit. So each institution has to have an internal audit. And that internal audit is supposed to give our regulatory institution information every 3 months, and the executive presidents of CONAMI can perfectly dismiss an internal audit if we see something not going well. So we think in that sense we are also looking and deepening and inside what the performance of the institution, its financial performance. And also, I would say that we have a free rate of interest. It's free, I forgot to say that. So our market, you can have we don't have a limited.
You don't have a ceiling.
We don't have a ceiling or anything, so it's open. But I think it has worked very well with the competition and the regulation.
Okay, thank you, Rosa. Do you have more questions?
Yeah,
yes.
I have two questions. Catherine Pulvermacher from the Microinsurance Network. The first question it really addresses this issue of using technology to come up with, let's call it fairer interest rates for the very poor. Is there a reason that we can't use technology to introduce more personalized rates for microfinance institution and SACCO clients? I know this is a question that clients themselves have begun to raise in parts of Africa, probably elsewhere. The second question relates to insurance. So you mentioned that in Nicaragua, the implication was that loan insurance is bundled with the interest rate. Is that correct? And what is the situation with respect to credit insurance for microfinance institution loans in West Africa?
Thank you. I have another question, also linked to the insurance. So we talk about a lot interest rate and the consumer protection. Can you also talk about the guarantees? How the interest rate is calculated, and the part of a guarantee, the risk linked to the to the finance, and also the sustainability of microfinance. What will be the next challenge? And yes, now with the increase of regulation, consumer protection, and international, how we can invest in another country, and how they will be protected. It's different from country to country, and how the investors will be protected.
Yes, there's around 20% watching this Midi de la Microfinance simultaneously on the internet. And there's one question from Merci Adero, and she's asking, is it right to say the cost of funding is not high when most MFIs subject poor clients to flat rate interest?
No le entiendo las dos preguntas. No le entendí yo.
Okay.
Suleiman, do you want to
Yes,
address that
I will
last
start,
question?
I will start by the last one, last in, face out. The best practice, you cannot use this method. The flat rate is not allowed. It's not the best practice. You have to use a declining method of, to calculate your interest rate. Now coming to the collaterals and the guarantee with the interest rate. You know, in finance, the higher the risk is, the higher the interest rate is. So when using, we have 2 or 3 methodologies. Individual credit, group credit, and individual in the group. If it is individual, or in this case, collaterals are requested. And it hasn't an effect on the interest rate because it is not a cost as it's a real cost. Now, MFIs use group lending. By using group lending, you have some solidarity between the members, and the guarantee is not requested there. Micro insurance in West Africa, there is a big network, CIMA, which allowed companies to operate as a insurance company or not. So there is a regulation right now in West Africa that does not allow the MFIs to make insurance. But there is a partnership between MFIs and insurance company to deal with this issue.
Thank you. Rosa, do you want to add anything?
Yes. On the question of insurance, that was just an example I was putting on cost, because it's not something that it's everybody has to have the insurance
It's not
as part of
bundled.
the cost of the rate of interest. But there is a product that many institutions are offering, which is micro insurance. So you offer the client an insurance, And then our law says that you have to disclose that cost whenever you have the insurance to the client. So when you write the contract, then you put, but it's a different product. It's a micro insurance that you offer. Not everybody has to offer it either. Depends on who. And it has been, by the way, a success in Nicaragua, because in like last year we added up like something like 160,000 clients very fast. So we could see that it was something well demanded by clients. And I forgot something, and thanks for your comments, because on client protection, that our law includes also the social performance management as an alternative for voluntarily do it for microfinance institutions. So we incentivize through our law to implement social performance management and all its universal standard principles. So what we do is offer microfinance institutions to make a social auditing to see if they are implementing it. And there is at the end a grade that you have, and depending on the grade, you get a certificate of social performance. And you also can access to funds in one of the only state bank that we have, Banco Produzcamos. So you can, and Banco Produzcamos and CONAMI have the arrangement that you can go and access those funds. So it's part of the incentive, but we still think it's a challenge to have more incentives for microfinance institutions that are complying with social performance.
Thank you, Rosa. So, does anyone want to address the question on the technology, on the usage of technology for more personalized rates for clients? Have you seen that happening in your markets?
What we saw in West Africa is the first requirement, which is the MIS. The microfinance institutions should have a performing MIS before linking to the new technology. So it is the reason why I say in the short run, new technology cannot help us reduce the interest rates, but it will be in long-term and in long-term way. So it is a new way. Let's say it is an alternative distribution channel.
Yes, I understand. So, well, I will invite to who
I would like to answer if I have.
Yes.
On the collateral.
Oh, yes. Please go ahead. We have 1 minute.
In terms of the collaterals, we just issued a new law in Nicaragua, which is the law of the guarantee mobilier. I don't know how to say that in the guarantee mobile mobilier. Yes, and
movable collateral, movable.
That was issued nationally so that we could have more access of clients to finance services. And most of the institutions that lend below $2,000, $3,000 don't need, the clients don't need collateral, because we believe and they believe that clients, very poor clients, don't need collateral. In the best practices of microfinance, you are more bound to believe that it's a confident relation with your client and you don't need collateral, and you know that most of them do not have. So this is, this law was mostly issued for small and medium enterprises, more than very poor or micro entrepreneurs.
Thank you. So, like, we have run out of time, but you can continue asking the speakers after the close of the session. We now invite Professor Dirk Zetsche to make the conclusion for this session.
Thank you, Veronica. Also, thanks to the panel for the wonderful contributions. Indeed, interest rate caps are a global issue. Right now, around half of all countries in the world impose some type of interest rate caps. But if we look at that, we have to distinguish between several type of caps. And in 23% of the in 23 countries, we know that hard caps are imposed. That means there's an absolute ceiling of interest rates that can be charged. And we've seen the potentially harmful effects of these types of ceiling on local providers in some countries where the ceiling is simply set too low. But also a soft cap had its downside, given that it usually relies on a well-working public ecosystem, which may not be always available in the respective countries. The discussion today has raised three focus areas where we shall look at in the future, and the other chair with its research mission is likely to do right that. One issue is cost. Rachel and others raised the difficulties to distinguish between justified and unjustified cost, and the example of operational cost of urban providers, which may hide certain type of profit opportunities behind fees, is of course an obvious example. But we also need to consider that not every MFI is right that. About a third of the MFIs provide additional consultancy services, and of course that costs money as well. And we also speak about very short-term financing for some weeks up to 3 to 6 months, and it is obvious that in those type of transactions the costs of contracting are overly high when compared to long-term credit relations. So here I think a one-size-fits-all approach is not justified. We need to look at the cases, and we will have very bad players and very good ones. Yeah? And that's usually the difficulty when we look at it. Another issue is risk. Of course, we all know that we speak about unsecured debt by potentially high-risk clients without any type of equity cushion. And this makes microfinance lending very similar to equity. Microfinance lending is a type of venture capital in the most literal sense. It is a venture to lend to these type of clients, and of course, high losses may come with it, and so potentially high numbers need also to be assessed in terms of the loss rate. And here again, we maybe have very stable environments where the numbers are just too high, and we have others where the numbers reflect the risk. Again, also with regard to risk, a one-size-fits-all approach is not justified. And the last issue we raised today was transparency. And here again, I think that transparency is very crucial indeed, but we need to apply it on both sides. On the one hand, this refers to the microfinance institutions. But on the other hand, let's not forget about certain borrowers who take out debt from multiple lenders at the same time and thereby implicitly increase the risk. And here I think it is crucial that not only the MFI discloses not only the interest rates, but also, of course, any fees charged, because I don't think it makes a difference whether you rip off clients by charging fees or interest rates, but also the client needs to disclose what's going on, and the credit register, I think, would be very, very helpful to enhance transparency in these markets. Of course, there are a lot of technical issues to set up these registers, but maybe a kind of two-pronged approach, transparency on the side of the institution and on the side of a public register could help here. If we had information asymmetry reduced, we would expect that the price could go down where there are more than one provider of finance. But we still face the issue in microfinance that in some areas of the world, there will not be more than one provider. Let's just consider a small MFI in the rural areas lending to high-risk consumers. It may still be justified to charge absolutely high interest rates in this type of environment. And this is, of course, something that confirms the overall discussion as I perceived it today. There are bad examples, there are very good ones, but all in all, we need to apply a case-by-case rather than a one-size-fits-all approach. Thank you very much.
Thank you very much, Dirk, for such a concise and good summary of the session and of the issues we raised today. I thank you, the speakers, for your interesting information about your own countries. I thank you also the Bank of Luxembourg to welcome us in this auditorium, the Directorate for Development, Cooperation and Humanitarian Affairs, the Inclusive Finance Network of Luxembourg, and all of you that came to listen to this conference, as well as those who watch us live on other websites. Please enjoy the lunch and feel free to approach the panelists to keep the discussion.
Or the moderator.
Thank you.
Thank you.